So we're now recording. So welcome everybody. Thank you for joining us. So this is week 2 of our 4-week summer school. As we talked about last week, normally we would do these sorts of sessions in our various offices. We have offices all around the country in different cities, and we love to get aspiring young accountants to come in, whether they're at school, college, university, or even beyond, even people sometimes looking to change careers. You know, we love to help them answer questions around what sort of roles there are in accountancy and finance, you know, what sort of entry points there are, the different qualifications. So I am joined today by 3 of my colleagues, Amy, Nick, and Tim. So if you've got any questions, please feel free at any point, drop questions into the chat box and hopefully they'll be able to answer. And actually, I'm going to be asking you a few questions today. So hopefully you'll also help me out in the chat box with some of the little tasks that we're going to be performing over the next sort of hour and a quarter or so of this session. So we're going to be running through probably till something before 5 o'clock, but that will leave time for any Q&A at the end that you've got. So as we said, if you can all change your name to just your first name, you can do that by hovering your arrow over your own picture. You should see 3 dots, which then will allow you to change your name just to your first name. And if you keep your cameras off and keep your microphones on mute, that would be fantastic. So my name is Gareth John. I'm one of the directors, one of the tutors at First Intuition. So we train accountancy students. In fact, I've been training accountancy students for about 24 years. Quite a long time. In fact, one of the few people that's been training accountants for longer than me is Tim, actually, one of my colleagues on the call. I think you're just over 30 years now, aren't you, Tim? So hopefully between us, and Nick's been training for a long time, Amy's been involved in education for accountants as well. So you've probably got nearly 100 years of experience just on this call. So any questions, hopefully we can answer. Feel free, you know, I'm very active on LinkedIn, so feel free if you want to find me on LinkedIn. You know, we can link and you can see the sorts of things that I'm posting on there, and equally ask me questions through that. We do use Zoom for this forum. So in terms of how we're going to interact, so I'm going to be starting off with a couple of little polls, quite interested in a few thoughts from you, but it's predominantly going to be the chat box. So you can use the chat box to ask questions and also to answer some of the things I'm going to be asking you later. We're going to be running hopefully quite an interactive session to give you a bit of an in-depth idea as to some of the different roles and jobs within accounting and finance. Now, within that chat box, obviously, you need to make sure that that is used appropriately. So please don't share any personal information. Please don't be sharing any email addresses or phone numbers through the chat box, because obviously everyone can see that. And do keep it relevant and appropriate to the topics that we're discussing. My colleagues will be having a look at that and just making sure nobody's going off track too much there, and they are obviously there to help with any questions that might arise. We did sort of cover quite a lot of ground last week looking at different approaches, and one of the things we did talk about is the growth of apprenticeships within accountancy. An awful lot of the accountants that we now train do it under apprenticeships, whether they're school leavers, college leavers, even university leavers, even graduates these days are often doing apprenticeships. And actually we've got a little informative booklet that I think Amy is going to just drop a link into the chat box, so any of you can pick up that link if you want to have an electronic copy of our little booklet, as well as dealing with what apprenticeships really mean in this day and age. There is a little bit there around some of the different accountancy qualifications, so hopefully that'll be of general use throughout the coming weeks when you're trying to make decisions perhaps around your careers. We are, as I've said, you've got the chat box to ask specific questions, and hopefully we'll have a bit of time at the end of the session for any final Q&A that anybody has still got to lead us up to somewhere around 5 o'clock. Might be useful actually in this session for you to have pen and paper handy. We are going to be looking at some interactive exercise. I'm going to be putting you into some roles as accountants, as different members of finance teams. So pen and paper might be quite useful for you to note down a few ideas that you're going to be coming up with. But I'd like to start off with a little poll. So I'm going to shut this down while I open a poll to kick off with. And I'm just asking a general question, and there's no right or wrong answer, I would say, to this one. But in terms of aspirations around jobs, careers, where you might see your lives taking you, which of the following is the most important to you in a job? So if each of you can pick one of these, I've just come up with 5 things I think might be of interest to, well, anyone. Doesn't matter if you're going into the world of accountancy or any other career. 5 things that may or may not be of direct relevance to you. So earning a high salary, being able to travel the world with your work, variety in what you do day to day, so not the same old humdrum every day of work, being able to work 4 days a week. For some people, work-life balance is increasingly important, particularly if they've got to work around children, for instance, or helping businesses to make big strategic decisions. So I can just give you 20 seconds to have a think about that. See most people starting to fill in their answers. It looks like most people are there, so another 5 seconds. Well, if I now end the polling, we can share the results. Well, quite interesting. The number 1 there is earning a high salary. I guess ultimately people like to think they're going to be paid a good salary for the work that they're doing. But another very common one, variety in what people do day to day. I think people like the idea of having lots of different things they might be involved in. It's one of the things I love about my job. I never, ever get bored with what I do. Some people are interested in helping businesses to make big strategic decisions, actually being involved at quite a high level. We're going to talk a bit about strategy later in this session. But some people actually like the idea of perhaps maybe running businesses. I guess that might involve being on the board of directors, for instance. Being able to travel the world with work. Obviously that can be a big appeal, you know, having the opportunity to maybe live in different cities, whether that's for a long period of time or quite a short period of time. Interesting, actually, nobody interested in being able to work 4 days a week or perhaps having more flexible working. Depends, I think, on your age. I mean, certainly that's something that might appeal more as you go through your career and when you start having children, for instance. But I don't know, you may already have noticed, actually, I deliberately set this up because obviously we're talking about careers in accountancy and finance. And I've deliberately come up with 5 things, all of which I think can be delivered by career in accountancy and finance. You know, we talked last week about the fact that accountancy is what's sometimes called a profession. You know, you have to do exams, you get letters after your name. So it's a bit like being a lawyer. And as a result, professionals do tend to earn good salaries. You know, you can easily earn 60,000, 80,000 pounds, even into 3 figures as an accountant, and potentially even higher. You know, if you're on the board as the finance director of a large global company, no reason why you can't be earning potentially 7 figures. But actually an awful lot of people work in accountancy. We've talked already about the fact that all countries, all companies, all sectors, all industries need accountants. So actually for me, it was a great way to give me effectively a passport to potentially working in different parts of either the UK or even more broadly around the world. Certainly, I think being an accountant these days, there's an awful lot of variety. Accountants actually get involved in all sorts of different activities and jobs that are going on within organisations. It is actually possible as an accountant. I know quite a lot of qualified accountants who are now further on and more senior in their careers who actually do work fairly flexible, either not necessarily working a full 5 days a week or working short days, you know, particularly if they've got to work around childcare requirements. And if you remember, if you were here last week, do you remember the pyramid we looked at of different levels of decision making in a business, from the operational decisions at the bottom right the way up to the strategic decisions? And actually finance staff, whether it's the FD or the CFO, they do tend to be involved even at that very high level. I'm a big believer that to make any decision in a business, you've got to understand the financial implications, you've got to understand the numbers ultimately behind that decision. So actually, I would argue, no matter which of those is most important to you, and in fact, you might agree that could change as your career develops. For instance, often when people are younger, in their early 20s, it's the salary that's most critical. But actually, as you get towards your perhaps 40s like me, you realize maybe it's not all about the money, it's about the variety, It's about being involved in some more interesting decision making. And I firmly believe accountancy and finance can actually help all of those aspects potentially. So hopefully a good starting point for any of you that think those are priorities for you. So let's go back to my presentation. Let's just talk a little bit about where we're going. Now, if you remember this program of summer school sessions, we are actually running it as 4 weeks on the trot. So we started last week, and in fact, last week we saw the routes into accountancy. As I said, we did record that session, so that is going to be circulated to everybody that's registered, hopefully in the next couple of days, but we're just getting that hosted in an appropriate place. We're now moving into the second week, which is actually giving a little more of an interactive, almost case study, taster of the sort of roles, jobs, activities that people involved in accountancy and finance might be undertaking. We then got week 3 and week 4 to come up, where we're going to be looking at some of the transferable skills that accountants require, which actually are useful potentially in other types of career. And in the final week, we're going to look at actually applying for positions. We're going to talk a little bit about interviews, talk a little bit about CVs. Now, what about the aims for today's session? So hopefully, by the end of the session, you will have an even deeper understanding, because we saw some of these ideas last week when we talked about the sheer range of different roles. If you remember, I talked a bit about the roles in accountancy. We had one of the other speakers who, if you remember, had that screen with dozens and dozens of different roles. So hopefully you'll have a slightly deeper understanding of what some of those roles actually mean, particularly some of the entry-level roles that people often go into when they're starting to train. You're actually going to help, and this is where the chat box is hopefully going to come in later. You're hopefully going to help me making some decisions. Actually, let's give some advice, just like accountants would do. And a bit like we saw last week, I'm hoping that some of this will actually then inspire you to do some further research, even attend our next couple of weeks. Now, let's go to a second poll, actually, because I want to see who was paying attention. I'm going to ask you about some of these finance roles. So perhaps if in the chat box, can anybody remember any of the roles that we talked about last week that people working in finance sometimes work in? So if any of you can remember any of what we talked about last week, do you want to drop it? Auditor there from Diane, well done, straight on there. It's actually what I started my career as an auditor. Bookkeeper, well done. So remember, bookkeepers are the ones who literally keep the books. They're the ones that record all the transactions. You've got then financial accountant. I can see mention of that from Dan again. So financial accountant who actually takes the results of all of that bookkeeping. They take all those records that have been kept over a period of time and actually use them to create accounts. We've got management accountant there from Boris, and that's a different type of accountant to a financial accountant. If you remember, financial accountants tend to work at the year end, producing the so-called statutory year-end accounts that get filed with Companies House. Management accountants tend to be working behind the scenes to advise management. They're producing information for the managers of the business, often working much more regularly than once a year, maybe on a monthly basis, producing management accounts. We have seen auditors. Remember, auditors is about looking at all these numbers and trying to identify, are they correct? Are they right? Okay, so we've had a few different ideas there. So let me go back to my presentation. Sorry, because I've got various videos and stuff, I'm going to be jumping around a little bit. We're going to be looking at a little bit more detail at some of the different roles that accountants, and we've come up with a little sort of interactive case study exercise to take a step by step through 4 quite common roles that accountants will get involved in. So we're going to start by looking at what's called costing, and actually costing is a key role often for those management accountants that we've already mentioned. We're then going to look at financial reporting, which is actually a key role for those financial accountants that we've talked a bit about. We're going to think a little bit about auditing, and then even go into the top of that pyramid that we saw. And often this is where accountants' careers will take them as they get promoted to becoming a financial controller, or even a financial director or chief financial officer. They'll get more and more involved in the strategy of an organisation. Now, just thinking about those specific ideas, just got another little poll. I'd like to have a little bit of interactivity. So where is my next little poll here? So poll number 2, if I can launch this from what we were talking about and what you've maybe heard about in reality. I mean, which of these finance roles have those of you on the call? And you can choose more than one here. So there's multiple choice. Which of these roles have you heard of? It's not exhaustive. There are plenty of other roles in accounting. I think we saw Henna in the chat box mentioning insolvency. So when businesses fail, when they go out of business, there's a certain breed of accountants that actually look at the business as it goes bankrupt. We've seen tax advisors as well, for instance, another very specialist field in accountancy. Being so good at tax, you can help people to manage their tax affairs effectively. And so actually, you know, we've got a nice broad range, and in fact, people have obviously been listening since last week because nobody has put none of them, because we've obviously been talking about a few of them. But actually, it's over the next sort of 45 minutes or so, we're going to do a little bit of an exercise to hopefully give a little bit more detail, a bit more flesh on the bones of what some of these roles actually involve. So let's just share the results of them so you can see actually pretty much everybody has heard of auditing, which is good. As I said, I started my career as an auditor back when I was sort of 20. And in fact, if I was perfectly honest, when I got my first job as an auditor, I didn't really know what an auditor even did. It wasn't until I started working on the job I realized what an auditor was about. People thinking financial reporting, and that's something else that we'll talk about in a bit of detail. So let us start moving into the session. So if I can share my screen again. Now, we are, as I've said, going to look at a little kind of case study scenario of somebody who has won £10,000 on a scratch card. Now, actually, in the chat box, what would you guys do if you won £10,000 on a scratch card? Quite interesting what people would use £10,000 for. Nothing so far. We'll pay off debt, invest for income. Oh, that's very sensible. Save up for a rainy day. Very common at the moment with uncertainties, I think, caused by the economy. Buy 10,000 scratch cards. Well, yeah, double or quits. You could increase your money. Well, actually, a few people are talking there about investing. Now, very common thing to do if you've got spare money is to invest it. You could invest, I mean, you know, the simplest form of investing in some respects is just to invest your money in a bank account where you maybe get some interest. You may be aware that actually interest rates are very, very low at the moment. So you're not going to get a huge amount back on investing in a bank account. So some people might consider investing money in buying shares in a big company. Generally, investing in shares can give you a higher return than just putting it in a bank account, although it would be quite risky. You know, there's a danger, you know, particularly in current economic circumstances, that you buy shares in a company that then goes bankrupt and actually you then lose the money that you've invested. That wouldn't happen with a bank typically. Your money in the bank is a lot safer. But actually what some people might do, and we're going to hear from one such person in a second, is you might invest in setting up your own business. And in fact, quite often people come into accountancy and finance because they have an aspiration ultimately that maybe they want to run their own company. And actually they want the skills, the knowledge that will allow them to do so. So we're now going to hear from a dashing young entrepreneur here who has won £10,000 on a scratch card. So I'm just going to play you a short video here.
Well, my lucky day. I've just won £10,000 on a scratch card. I cannot believe my luck, but I'm determined not to waste this money. I'm determined not to waste this opportunity. I think I want to follow a dream I've had my whole life. I want to set up a cake making business. I love cakes. I love icing. I love filling. I think I can bake the tastiest cakes. And if I maybe buy a van to drive around my local town selling these gorgeous cakes to people at home. Big problem is, I don't know anything about running a business. I've never done it before. Now, I was talking to my bank manager when I was depositing my amazing winnings in the bank, and they said that the most respected professional business advisors are accountants. And that's why I've come to you. I need some advice. I've got a couple of key questions I'm hoping you can help me with. Firstly, what kind of costs am I going to incur in the first month if I start from scratch? And secondly, my target is to sell 1,000 cakes for £2 each, but I might be willing to drop that price. So can you help me? Firstly, if I do charge £2 for each of my cakes, will I actually generate some profit? And how cheap could I sell my 1,000 cakes for and still break even? I don't really want to make a loss. So I'm really hoping you can help me with these questions.
Right, so we've heard there from my alter ego, Gareth the entrepreneur, who's won his £10,000 and looking to set up a cake making business. Now, this is very typical of the kind of work an accountant would do, particularly, do you remember last week we talked about the difference between practice and industry? We talked about the fact that when accountants work in practice, it would be like for a big accounting firm or a small accounting firm, helping their clients. And a client might literally come to you with these sorts of questions. And this is the sort of, interesting, valuable advice that you can give to, an entrepreneur in this sort of situation. So let me go back to where we were. So we've won our £10,000 on a scratch card. Well, let's ask some of these questions then. So I'm hoping this is where you're going to help me out, because none of this is hopefully too difficult. If you were setting up a cake making business, what kind of costs do you think would be incurred in the first month setting something like that up from scratch? So why don't you just start throwing a few ideas of the kind of costs you think that business might suffer? I'm wondering if any of my colleagues can help. Are we getting any interesting costs coming in here? Tim, Nick, Amy, are we seeing any costs coming in at this stage?
Yeah, loads, absolutely loads.
What sort of ideas?
All the right kind of things are coming in there, Gareth. So the van, equipment, materials, marketing.
So when you say materials, what do you think we're talking about there, Tim?
Oh, okay. So I'm guessing if you're going to be making cakes, Gareth, you'd be talking about flour and sugar, and I would hope fruit, cherries specifically to go on the top of the cakes, icing, etc., etc. All of the materials that you would use to make cakes.
Yeah, so materials is a term we use in accounting to basically mean whatever's going into our product. Now, in the case of cakes, as you say, it's essentially ingredients. But you can imagine if we were planning to build cars, the materials might include things like steel and tires and steering wheels and whatever. Any other interesting costs that cropped up in there?
I've just seen Henry make a very good one. Research.
Oh,
I like that.
I mean, and actually that can cover different things, because it could be market research for, sometimes I'm sure everyone will have seen people standing on streets with clipboards asking questions of passers-by. So you could do some market research, perhaps to find out if people do want fruitcakes, or if they prefer less healthy ones, Tim. So a bit of market research, and even things like, you know, product development. You know, depending on how complicated the cakes that you want to produce are, do you actually need to do some kind of, you know, almost science experiments to actually create them? You know, you see some incredible things on the likes of British Bake Off, don't you? So yeah, so absolutely, lots and lots of different kind of ideas are coming through for the cakes that we might want to produce.
Diane's just got a very good one. The cost of borrowing. I like that.
Well, am I going to need to borrow? Because what's this all being funded by?
Is £10,000 enough for a cake?
Well, and absolutely, and these are the kind of questions that business owners need to think. You know, if you can set up your cake making business in your own kitchen, and you're only going to bake, you know, a few cakes to start with, actually, could it be done for the £10,000 without any further investment? If you start talking about having a van, you know, that's maybe a different matter. But obviously, if you're going to be using more than £10,000, then actually perhaps we will need to borrow the money. And obviously, if you borrow money, there will be interest to be paid on that. So yes, absolutely, that's a very good point.
Sorry, Gareth, Callum had an interesting one, which perhaps people don't like quite so much. Callum mentioned tax.
Well, yes, absolutely. Absolutely. I mean, the whole point of running a business is to earn money, to earn profit. And if you earn profit, you're going to have to pay tax on it. So, you know, we're actually not going to complicate this exercise with tax because we've only got a short amount of time to deal with. But absolutely, Callum, well done. I mean, it's something that you would have to consider. And as we've already mentioned, there's a whole specialist branch of accounting, which is just looking at tax advisory. There's even specific qualifications for tax advice. So it certainly would be a cost that the business person would have to consider. Right, well, if I can now bring up another screen, because what I've done, and I've just made these up completely, I've suggested a handful here of costs, and some of these have been thrown into the chat box in the last 5 minutes, of the sorts of costs that maybe I would incur in setting up my little cake making business. So let's say the ingredients, all that flour and butter and cherries, absolutely for the top of the cake. So let's say that's £500 that maybe I've spent on the ingredients, maybe £3,500 on getting a new state-of-the-art oven, maybe £500 for other equipment, you know, I guess like mixing bowls and spatulas and whatever. Now, whilst I might think that I'm going to make all the cakes myself, maybe realistically I decide that I'm going to get somebody to help me, maybe to help me to bake the cakes, maybe to help me to drive the van, for instance. So maybe I'm going to pay somebody, so I'll have a couple of £100 worth of wages. Let's say the van itself cost me a couple of £1,000, might buy a second-hand van, as long as it runs okay, that'll be okay. And let's say rather than doing it in my kitchen, I decide that actually I'm going to rent a small space where I can actually have more control over the environment. You know, setting up a business in your own house isn't ideal at the best of times. So let's say that rent for this first month for my space is going to be £300. But notice, let's imagine that we're not going to be paying for that rent until next month. So let's say our landlord asks for payment a month in arrears, as that's sometimes referred to. Let's say we're going to delay the payment for that rent till next month. Now, if I tally up all of those costs that I've come up with there, that does give me an overall cost of £7,000 for running the first month of my business. Let's say, obviously completely made up numbers here. So actually going back to your point, Nick, that I think you had in from Diane, wasn't it? Would I necessarily need to borrow to fund the first month of my business here? I mean, I
think you're all right with the first month. It just depends when you start to see some income.
Absolutely, yeah, that's a very good point. And you know, but given it's cakes, which are perishable, you'd hope I'm selling them pretty quickly. So if I'm baking a bunch of cakes in the first month, hopefully I am, or maybe my member of staff is driving around the local area to sell those. So yeah, we'll come to income shortly because we do have an idea of how many cakes our entrepreneur wants to sell and what price they're hoping to sell for. But so far, you know, I can certainly fund it out of my £10,000 winnings. Although actually, I mean, given that interest rates are very, very low, an awful lot of businesses might still be quite keen to borrow to fund because it is so cheap to borrow money at the moment. One thing to bear in mind though, when you're looking in a business, and this is something accountants spend a lot of time looking at, is there's a big difference in some situations of when things happen and when they're actually paid for. So for instance, we've got the variety of costs here. Will these costs all have been used up by the end of the first month? Are there any costs here? Well, which costs, and use the chat box here, which of these costs do you imagine would have been fully used up and gone by the end of the first month? Anyone got any thoughts on which ones would have been used up after a month? Perhaps if Nick and Tim can help with what's coming in on the chat box here.
Ingredients, wages, rent, ingredients. Everyone's saying ingredients.
Yeah, I think ingredients, if we bought the flour and the butter and we're using that to bake the cakes and we then go and sell the cakes, that will all have gone. Presumably, if we go into a second month, we're going to need to buy some more ingredients. I think certainly the wage as well. If you're paying somebody, think of everyone here, if any of you have ever had jobs, if you get paid for the month, so you pay somebody the £200 for the month, you have to pay them again in the following month. They don't come back for free. So I agree the wages, and again, the rent, I think the rent, if that's for the month, then that will only be for that particular period. So you've got some of the costs that we've incurred that in a sense will have been used up by the end of the month. So they are true costs for running my business for that first month. Some of the other things will still be there. So things that will still be there. So for instance, at the end of the first month, presumably we'll still have the oven. It will still be there ready to bake cakes in the second month, the third month, and so on. The equipment, unless some of it's been broken, presumably the equipment will still be there. The van, hopefully we'll still own the van. And this is where you start getting a fundamental difference that accountants are very interested in. When you spend money, which bits relate to that specific month or that specific period, and which are actually going to be kept and held until the future. So in reality, have we actually suffered £7,000 worth of cost in the first month that's all been used and all disappeared? Well, actually, no, not at all. So in fact, can I now get everybody, and feel free to chuck a number into the chat box, of the £7,000 of costs I've incurred, how much of that actually relates to the first month? How much of that has been used up in the first month? So let's see what sort of ideas we get coming through for that. And this, for some of you, is possibly your first little foray into being an accountant. Because accountants are always very interested in when things relate to. Do they relate to this month, or are they something about the further future?
Most people are saying £1,000.
Well, if they are, I would agree with them. Because as we've mentioned, we've already identified those elements that are used up in that first month. So the ingredients will probably be gone. The wages will have paid for the month, the rent for the month. So absolutely the cost of making, and the entrepreneur was thinking about making 1,000 cakes in that first month, is £1,000. Now the next question, and this is this whole process of costing, because what we've been doing so far is we've been analysing the costs of running the business, haven't we? And that's a very important part of trying to ensure that we're actually going to make some money. Because obviously to make money in business, you need to make sure that the income, the revenue that you're generating, the sales you're making are greater than the costs you're incurring. Now, we're looking at 1,000 cakes here. And if you remember, our entrepreneur was initially considering a price of £2 per cake. Now, if that's the case, if they do sell 1,000 cakes for £2 each, will they have actually made a profit? And in fact, if any of you can even work out how much profit, and I'm keeping the numbers simple here, you can imagine things get a bit fiddlier in the real world, to say the least. You can imagine the challenges of doing this sort of exercise with a company like Amazon and just the number of transactions they get involved in. But actually the principles are the same, really. So are people reckoning we're going to make a profit?
Yes, Gareth, they are. Sadia has said, if you manage to sell all those cakes that you said you were going to, which is a good comment, I think. And pretty much most people are going for £1,000, and I'm sure you would sell them as long as they all had cherries on them.
and you know, that is one of the toughest parts of any business, actually, is to make sure you're selling what you want to sell. You know, it's a whole different arena within any business. And if any of you have watched, you know, things like The Apprentice, you know, often they'll have an apprentice challenge where they are selling cakes or sandwiches or something or other, and at the end of the day they're always running around selling things off for 10 pence each, aren't they, because they haven't managed to make the sales they wanted to. But if we imagine that we are indeed going to generate £2 of sales from each of these 1,000 cakes, then we would generate sales or income or revenue of £2,000, 1,000 times £2 each. We saw that the costs for the month, if we ignored all those things that are going to be carried forward, were £1,000. So actually the profit is £1,000. So he's had a successful first month actually making money. It's not many businesses that would actually make money in the first month. Now, actually, in very simple terms, and obviously it gets much more complicated, you know, this is why people study for 3, 4, 5 years to become qualified accountants. It obviously gets much more complicated in the real world. But this actually is a very simple initial example of what we call a P&L, or a profit and loss account, for our little cake making business here. And I'm sure our entrepreneur Gareth will be very pleased to look at this P&L to identify that actually he has made some money in that first month. Now, as well as helping, you can see the purpose of the costing that we did by looking at the costs and by splitting them out into the costs that relate to the period and those that are maybe carried forward into the future. You know, that helps us to identify whether we're really making money. You can imagine if you remember, we spent a total of, was it £7,000 if we included the van and the oven and everything. Now, if you looked at that full £7,000 that we spent and compared it to the £2,000 of income, you might have been mistaken for thinking we'd made a massive loss, that we'd lost loads of money, but we haven't really. Because remember, at the end of the month, we're still going to have the oven, we're still going to have the car, we're still going to have some of the equipment perhaps, and that'll be carried forward into future periods. So the profit and loss account is helping us to identify, are we actually making money in a given period that we're looking at? It can actually also help with some decision making. Remember some of the advice we might want to give to our entrepreneur, and in fact he did ask us a specific question, that whilst he was thinking about charging £2, actually he was thinking, well, what if I want to charge a bit less than that? You can imagine, particularly at the very beginning of a new business, you might be quite interested in going in at a low price to win customers, to win market. I'm sure you've all seen, you know, cheap offers from new businesses. So what if Gareth thought, well, I won't charge £2, I'll build up to that in a few months' time. What's the least I could charge in order to, and he used the term break even. Any of you got any idea what we mean when we break even? Any thoughts in the chat box about what break even is? A term that accountants use a lot. See a bit of action coming in on the chat box. What you're seeing, Tim?
Yep, absolutely. Costs equals sales, revenues equals costs, no profit, no loss. That appropriate phrases.
Basically sums it up. I mean, you can imagine, to try and make a profit in a business is great, but particularly if it's a new business, you might think, well, it's unrealistic to think I'm going to make any major profit, but I at least want to not lose money. I don't want to lose anything. I want to cover my costs. And break even very much is, what would we have to generate in revenue so that we don't lose money? So actually there was that additional question then that the entrepreneur asked: how cheaply could they sell their cakes and actually still cover their costs? So we've seen at £2 per cake, they're making a healthy profit. What would we have to charge to just break even? Again, I've tried to use some numbers that are pretty straightforward here, hopefully.
Everyone's saying £1.
Yeah, so fantastic. And you can see, and you know, hopefully laying it out in this way is making it relatively straightforward for people to grasp. But this is some fundamental activity that accountants get involved in, obviously more complex in reality. But if we can go to our client, our entrepreneur, and say, well, at £2, if you sell all your cakes, you're going to make £1,000 of profit, but you have to charge at least £1 per cake in order to cover your costs, in order to not lose money. That's some quite useful information for them to actually go out and actually operate in their first month of their business. So if I now go back, let's
Gareth, can I just jump in with a quick one? Amy's asked a very good question, which says, if the cost of the rent is not due until next month, then why is it a cost for this month? I think a cracking accountant question. Question for an accountant.
It's actually a very good accounting question, and I always think it's about what costs have been incurred in a period. So in the first month, have we been in the premises? Yeah, presumably. Do we therefore owe the landlord that money? Yes, I think we will do, and we're going to see the implications of this fairly shortly in terms of, because we've seen our profit and loss account. Some of you might also have heard of what's called the balance sheet, and we'll come to the balance sheet fairly shortly. For accountants, in a lot of cases, they're not that interested in when things are paid for. They're interested in when the transaction actually happens. And if we've occupied that space for that month, we've incurred the cost. We owe the money to the landlord. Even if we moved out after the first month, you can imagine we'd still have to pay the landlord at some point in the future, wouldn't we? And so, it's something, and we don't want to get too complicated here, but something called the accruals concept, which some of you, if you've ever studied any accountancy, might have touched on in your studies, the so-called accruals concept, which is all about, we must recognize transactions when they happen, not when they're paid for, because that could be quite different. You can imagine the same might occur with sales. Let's say I've made some sales in the first month. I sold 50 of my cakes to somebody, but they haven't paid me yet. So let's say they're going to pay me next month. Well, actually, I would still recognize the income in the first month because that's when I made the sale. Doesn't matter that they haven't paid me yet. That's it. It's actually a great question, as Tim has pointed out, and something that when you study, if you move on to study accountancy, you get involved in a huge amount of detail. It's something that you literally look at for months and months, different aspects of this so-called accruals concept. Right, so let us return. I want to go back to my presentation. So we've talked about that first question. We've looked at costing. We also had a bit of a think about what profit would be generated selling at £2 per cake and what the break-even price would need to be. And we've seen some of the workings all the way up to creating a profit and loss account, which is a great starting point for understanding what some accountants get involved in. But ultimately, what we've done so far is a lot of costing. What cost accountants do in a business, and cost accountant is often a word used for management accountants. They're looking at the costs incurred in the business to ultimately try and ensure that decisions are taken that are going to mean that the business makes money. You can imagine if you're not going to ever make money, there's probably no point actually even starting your business. So cost accountants will be delivering information to the managers of the business to help them perhaps set prices, or even to control costs. You can imagine one way of improving profit in a business is to actually control the costs that you're suffering. So that's our costing as a potential role for accountants. We're now going to move to the second, which is financial reporting. So if the costing is done by management accountants, financial reporting is often done by financial accountants. We talked a little bit about the difference between the two last week. So it's the end of the first month. We're now going to go back to our entrepreneur and find out what has happened. So bear with me a second while I switch this over. And he's even got a new shirt on as well.
Well, what a roller coaster first month we've had. I went with £2 selling price per cake, and amazingly, I sold every single cake that I made. Now, I've really enjoyed being an entrepreneur, but it's been a really hard first month, really stressful, and I'm considering whether to pack it all in, retire to a beach resort somewhere. Now, I've got a question for you. I need some more advice. As it is the end of my first month, I want to know what position my business is in. I don't have any idea. How much of my original £10,000 is left? And is there anything else that the business owns at the moment? Does the business owe anybody any money? If I was to stop the business now after this first month, how much money would I end up getting back from it? Is that going to be enough for me to retire to my beach villa? I'd really appreciate your advice.
Fantastic. So some more advice being sought by our entrepreneur. Now, the first thing I would probably point out is I'm not sure he's going to have much of a beach villa after 1 month in business. And to set up a successful business, I think requires a little bit more staying power than just 1 single month. But we're just taking this as a very simple scenario to work with. So let's think about the further questions that Gareth, the entrepreneur, has now posed us. So, and we saw with the kind of first exercise that we were doing, we were looking particularly at the profit being generated. Now, when you're looking at the profit generated, we saw that so-called P&L account, the profit and loss account. And actually what some people say is that the profit and loss account is helping to identify what the performance of the business has been. Have they made money? Have they lost money? We saw that actually Gareth's business was going to make money in that first month. Now that's about performance. What we're now looking at is what's called position. So actually, if you look at the end of that first month, what position, and if you remember some of the questions that Gareth asked, you know, of the £10,000, how much of that is actually left? Is there anything else that the business owns? And in fact, a term some of you may have come across about something that you own is an asset. Also, does the business owe anybody any money? And again, a term some of you may have come across as liability there. And if he does stop his business after that first month, how much money would be there? How much money would he be able to get back from it? There's quite a lot going on there. And in fact, you know, clients can be like this. They'll ask you several different questions almost in the same sentence. And certainly if any of you do progress on to doing studies for things like AAT, ICAEW, other accountancy qualifications, often in exam questions, you'll actually have several elements to a question that you're given. You might literally have a client saying to you, right, I need this, 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 and this. And it's important you break things out and deal with each requirement in turn. So we are going to look at this in turn, and we're going to go back to our spreadsheet here. So if we start looking at the cash position, now if you remember, we did analyze all those costs incurred in the first month of the business. So the ingredients, the oven, equipment, blah, 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 everything mounting up to £7,000. Now, if you remember, when we were looking at the profit for the first month, we only took account of those costs that were sort of used up during the month, those that were incurred in the month. So we didn't count the oven because we'd still own the oven. We didn't count the van because we'd still count the van. But ultimately, we have £7,000 of costs that cropped up in that first month. We then made sales, and if you remember, he did manage to sell his 1,000 cakes for £2 each, so that was £2,000 worth of revenue. Now, if he started with £10,000 from his scratch card, total costs for the first month were £7,000, those that were incurred in the month and that were carried forward, and then sales were generating £2,000. Quick question, what cash position do you think the business is therefore in at the end of that month? And one thing I would point out here, because there's a little potential trip, is remember about the rent. Because remember that as much as we've said the rent was a cost incurred in the first month, because we have occupied that space, that premises, whatever it is, we haven't actually paid for it yet.
So we've got a few different answers on this.
Yeah, I thought we might do. What sort of different answers are you seeing, Nick?
5,000 seems quite popular.
Well, where do you think the 5,000 comes from?
I have a nagging feeling that might be the total amount of costs plus the £2,000 that we've received, irrespective of if we paid for it or not.
So well, let's track it through bit by bit. So how much did we start with from our scratch card winning?
We started off 10,000.
So we'd have 10,000. Now I'm guessing what people might have done is they might have said, right, well, we spent 7,000 on costs. That would take us down to 3,000. Then we've generated 2,000 of income, maybe takes us back to the 5,000. So Yeah, I mean, that would be an easy figure to pull out of here, but what have they missed there, Nick?
Now, the rent, we might have incurred it this month, but we haven't written a check out as yet for that.
Yeah, I mean, that's the thing. If we're paying the landlord, remember that term, if we're paying the landlord in arrears, we haven't actually paid that rent yet. And so we haven't had any money go out of our bank account for that rent yet. So in fact, of the 7,000 of costs, how much have we actually physically paid for so far? Well, I think more like 6,700. So it looks like everything else we have actually paid for. So we paid for the ingredients, paid for the oven. We haven't paid for the rent yet. So if we start with 10,000, we've actually only paid out 6,700 and then received £2,000 of sales. Are you seeing any other, maybe more correct answers in there?
5,300 is popping up quite a bit now.
Yeah, I think 5,300. Once you spot the issue with the rent, that £300, actually we haven't paid yet. We've incurred the cost. We haven't actually paid for it yet. I think the business will actually end up with 5,300 at the end of that first month. And in fact, that cash, you can imagine that would literally still be sitting in the bank account of the business. That's something that we could describe as an asset of the business. It is something that the business owns. An asset is just something that is owned by the business. Now, the cash isn't the only asset that it owns, because what else, and again, feel free to start throwing things into the chat box, what else does the business still own at the end of that first month? What has it paid for that it still owns that it hasn't used up entirely?
Good things coming up here, Gareth. Van equipment, van oven, which I'm guessing is two things rather than a Dutchman's name.
Or maybe, and in fact, this could be an innovation for the business, an oven in a van, so you can drive around around. That's a brilliant idea we're already seeing coming out on the strategic side. We'll come to that later. But absolutely, yeah, because you can imagine the van, the oven, the equipment, although that was bought in the first month, that's not used up. That's still going to be there. These are assets of the business. And in fact, we can combine them with the cash, because remember, the cash we're still going to have at the end, to actually think about what the overall assets of this business are at the end of their first month. So we've got the oven, the equipment, the van. Now, I've put them in here at the values that we originally paid for them. Now, some of you, if you've done any accounting studies, you may have come across a concept called depreciation. If you haven't, don't worry about it. It's a more complex idea. The idea, I mean, some of you, I'm sure, will know that if you buy a car, it loses value. It's not, you know, if you paid 15,000 for a car, it's not worth the same, you know, a year later. But let's not get complicated here. So we're just going to consider that the oven is still worth 3,500. The van's still worth 2,000. So actually we've got £6,000 of those three assets that we bought that we've still got at the end of the first month, and we've still got that cash, 5,300. So in fact, and if you think about it, from a starting point at the very beginning, where he had £10,000 from his scratch card, that was effectively his asset at the beginning, that was the cash at the very beginning, the business has now got total assets of 11,300. Now, assets is one way to look at the kind of value of a business. What does it own? And you know, it looks like the business is actually getting a bit bigger. It owns more than it started with. But what we can't forget is, as well as things that the business owns, its assets, also need to consider what it owes. Now, if assets is a bit of a fancy accounting name for what it owns, does anyone ever come across a term, a bit of a fancy term for when you owe somebody money? You can be described as having a well, if things you own are an asset, things you owe are sometimes described as a liability. But my wife often describes me as a liability, but that's for different reasons. But liabilities is where you owe somebody some money. So for instance, if you borrow money, you have a liability to repay that loan. If you have an overdraft, you have a liability to repay that overdraft. In this case, what is it that we owe? It's that rent, wasn't it? Because whilst we've been in the premises, we've been in the space, we haven't actually paid for it yet. So we can also consider the liability, in this case, the rent, because remember, we've incurred that expense, we've been in the property, we owe the money to the landlord, but we haven't paid it yet. So at some point in the future, maybe in the second month, we're going to have to pay that. And these are the so-called liabilities. So we've got assets that we own, liabilities that we owe. And if you remember, we saw And the first big exercise, our P&L, our profit and loss account, which combines the income we generated, remember the £2,000 of sales we made, with the costs that we incurred in the month, that £1,000 for the ingredients we'd used up, the wages we'd used up. If the profit and loss account combines income and costs, we've got another key accounting document that combines assets and liabilities. And this is what's referred to, some of you may have come across the idea of a balance sheet. Now, the way the balance sheet would work is you're combining the assets, which as we've seen are 11,300 in total. You then deduct the liabilities you owe. In this case, the £300 that we owe to the landlords. And that gives us, in some respects, and it's not quite as simple as this, but one way of viewing what the value of the business now is, £11,000 in total. We've got assets of 11,300 that we own, £300 that we owe to somebody else. Take the net difference, is an £11,000 figure for the, what's sometimes called the net asset value of the business. Now, if you remember, he did start with 10,000, so when he had his scratch card, he cashed it in, £10,000. So we're now saying that the net assets of the business are 11,000. Well, where's that extra £1,000 come from? Well, it's come from the profit they made. Because the whole point of setting up a business is to generate profit, and actually that profit is effectively owned by the owner. That's the reason that the entrepreneur set it up. And in fact, and don't worry about this is getting into proper accounting now, you could set up a balance sheet, and all the balance sheet does is it combines those assets owned by the business, including the cash, remember, but the oven, the van, knock off the liability that was owed to the landlord for the rent. That gives you an overall £11,000, what we sometimes call the net assets figure, because you're netting off the total of the assets against that liability figure. And if that's the value of the business, well, who owns the business? Well, the entrepreneur, the owner owns the business. And so what we show on a balance sheet is at the bottom, we then show a little record of what the value for the owner is, which you can imagine here was the original £10,000 from their scratch card that they put in, plus that profit they've made. They made a £1,000 profit in the first month, which is their profit now. So actually, we've now seen through this little exercise, we've seen our profit and loss account, looking at income and costs, and we've seen a balance sheet with assets and liabilities. Is that something any of you have ever seen before, or does that make a little bit of sense to some of you, hopefully? Well, if we come away from that, and again, that's starting to stray into the kind of things you even see when you start doing your first courses in accounting. They're pretty fundamental concepts for accountants, but hopefully that gives you a little bit of an idea of where we're heading. And if we saw that the costing was what maybe management accountants do in a business, this financial reporting at the end of a period, this is more what financial accountants do. And it's worth being aware, financial accounting, where you're preparing these sorts of results, they're required by law, they are a statutory requirement. Generally, and remember we mentioned last week, generally they're done at the end of each year. So you have this year-end process that financial accounts are engaged in, producing the profit and loss, the balance sheet for the business for that period. They then get sent to Companies House to get logged with Companies House. And in fact, you can go onto Companies House website and you can draw off any set of accounts for a company that you want, actually. They're all public record. That's a very different role to the management accountants that were doing the sort of month-end figures, helping with costing, maybe helping set prices. So, now hopefully it gives us a bit of an overview of what management accountants or cost accountants are involved in, and then what financial accountants involved in that financial reporting process are. You see there's parallels and similarities, but they are quite distinct roles. Well, who is it who then goes through it all, checking whether it's correct, checking whether any mistakes have been made? Well, this is our auditing process. So now I'm going to think a little bit about the audit process. And in fact, not all companies need audits. And in fact, right at the very beginning of Gareth's little cake business here, he would be far too small to need an audit. You have to have turnover of millions of pounds to require an audit. But if you are big enough, companies are required by law to have an audit. So you have to have an external, often a practice firm, remember that idea, coming into the organization just to look through the numbers to see if they think that those year-end accounts, see if they're correct. It's what I started my career doing. I was an auditor for my first sort of 3 or 4 years in finance, and I would go to different clients. I would look at their records. I would do various checks and tests to see whether it looked like the numbers were correct. Now, imagine Gareth's business has actually grown over the years. So let's fast forward a number of years, and let's say that Gareth's business now does require an audit. And actually, we're now going to take a slightly different role in this situation. We're now going to not work within the company. We're going to work for an audit company. We're going to work for a practice firm who are doing the audit for Gareth's cake making empire. It's now a big business. And so we're going to start by looking at some instructions from our partners. So imagine that we're like I was in my first 2 or 3 years. I'm working for an audit firm. My partner is going to come and give me some instructions. So let us now move to hear from our audit partner, Emma.
Firstly, what reasons might management have to deliberately falsify some of the numbers in the financial statements? So why would they want to falsify the figures? Surely they were honest. Secondly, which numbers in the P&L or the balance sheet are most likely to be wrong? What numbers could they easily manipulate? What numbers could they try and shift around? Thirdly, can you suggest any testing that we could do to make sure that those figures are correct, or to give us some level of assurance that they're correct so that we can sign our audit opinion? So have a look at what the FD is saying and have a think about those things. Why would management try and change the accounts? What numbers would they try and change? And how are we going to make sure that they're okay? Thank you.
So that's our briefing from our audit partner. In fact, Emma there, she mentioned the idea of an audit opinion. And the idea of what auditors do is they'll look at those year-end financial accounts, they'll test various things to see whether they think the numbers are accurate. And hopefully, once they've done that, they will sign off what they call a clean audit opinion. Say, yes, we think the numbers are broadly correct, not 100% accurate perhaps, but broadly correct. Or they might sign off a negative opinion saying, actually, no, we don't agree with these numbers, which can be quite serious for a company, you can imagine. So Emma has given us a little briefing here, given us some questions to think about. So in fact, if I just summarize the questions. So firstly, why might management want to deliberately falsify, mislead some of the numbers? It does sometimes happen. You may have even heard in the press various scandals around accountants. Question 2, which numbers are most liable to be wrong? And question 3, what sort of tests can we do to then check whether we think they're correct or not? Now, those are the sorts of questions you might ask about any client that you've got. The thing is, every client's going to be slightly different. You can imagine an organization, you can imagine a company that deals with a lot of cash transactions where they're handling literally physical notes and coins. There's a much higher risk of fraud through theft of cash, whereas some businesses never touch any cash, in which case that's not an issue at all. So what we would have to do in this sort of situation is we would have to go and have conversations with members of staff at the client to try and identify what the major risks and issues potentially are. It's one of the things I used to love about being an auditor, actually, is I used to spend a lot of my time talking to finance staff at the clients I was visiting. I always found it really interesting because you could find out, about how they run their business. So in order to answer these questions, we're actually going to have to talk to somebody else. We're going to have to talk to, in this case, the FD. So we're now going to introduce Kelly, the finance director of the organization. If I can pull up Kelly. So here we go.
Oh, hi Emma. Yes, it's great to meet up, isn't it, to get on with the audit planning. You're going to have no problems at all this year. We've had quite a fantastic year, even despite the pandemic. I will just apologise, although obviously, as you know, the owner, Gareth, he does like us to run a tight ship, lots of, nice and office attire that we should be wearing for once, because we're all working at home during this pandemic. I'm here in my playroom / study. He has actually allowed us not to wear our suit and tie. Oh, anyway, I say we have had a fantastic year. You won't find any problems at all with the accounts. It's going to be a lovely, easy audit for you and your team. Do you know, we have had record growth with our sales. It's been absolutely booming. We've beat all of our predictions, which is great because, as we know, the owner Gareth gets quite cross if we don't beat our sales budget. But we smashed it this year. We've also kept costs really under control, so we do like to really watch those margins. It's been so good that we've been looking at acquiring new businesses. We will have to borrow some money to do that, but because we've had such a fantastic year, and as you see from the account, it looks brilliant, we should be able to go and get that borrowing without a problem. Been great for me personally as well. The management team, we've got a new profit related bonus scheme in the year, which I'm super excited about, given we've had such a bumper year. Other things I suppose that you should know about that's been going on, we did have a sort of a small fire during the year, destroyed a little bit of our paperwork, but it was nothing really, just to do with the purchase of some ingredients that we'd made during the year, so I wouldn't really get over worried about that at all. Other bits you should know about for your audit: the warehouse manager was off sick at the end of last year, nothing coronavirus related, luckily. So it was absolutely fine. We just got the sales team. They went in and carried out the stock take for us. So they count all the ingredients and the finished cakes, that we've got on site at the year end, so we can make sure we've got the right valuation for our stock on our balance sheet. So I really don't think that would have been too much of an issue, because we've got the sales team, they know what they're doing the stock take. What else would you need to know about for your audit this year? Let's just have a think. Our cakes relatively mass produced now, which has been great, so good cost saving. We managed to source a new supplier during the year, so some of our ingredients we have to pay for in US dollars now rather than in sterling. Most of our customers remain as they have been, so mostly medium to large shops who sell our cakes. One of our main customers having financial difficulties at the minute, but I'm sure it'd be absolutely fine. They owe us quite a large balance at the year end, but it's just going to be temporary. They'll pay. You'll see them in the sales ledger control account. We've never really had a problem with our debtors in the past, so yeah, it'll be absolutely fine. As I say, the accounts are looking super, so I think you'll have a nice, easy audit this year. But let me know if you need anything else. That's what I'm here for.
Well, quite a lot of interesting information there from Kelly. And remembering back to when I was an auditor, you can imagine often my clients would tell me that there was no issues, nothing to worry about, but my job was to identify whether there was anything to worry about. A very important idea in auditing is what they call professional skepticism. So having a questioning attitude, not taking what people say at face value and checking. I mean, she says there was no issues, but actually she then went on to tell us about what I think were quite a number of different issues. So let's think about each of these questions and if you remember Emma, our audit partner from the beginning, so she initially talked about, what reasons might management have to deliberately falsify some of the numbers in the financial statements. So perhaps in the chat box, based on what Kelly, the FD, said, anything that she said that jumped out to you as potential reasons why we might need to be a bit concerned whether the numbers are going to be correct?
We've got the exchange rate or the bonus coming through at the moment.
Yeah, well, two issues there. I mean, the bonus, apart from anything else, you can imagine, if she's on a profit-related bonus, she's obviously going to want the profit to be as high as possible, even if she's potentially manipulating the figures. Yeah, the exchange rate as well, there's an issue there. Not sure if that would necessarily be deliberate. That's maybe just an area where they may use wrong exchange rates. Anything else cropping up?
Yeah, a couple of other comments in there about wanting the business to appear healthier than it is, looking for loans, things like this.
You know, obviously, if you're going to borrow money from a bank, they're going to want to look at your results, and you know, the better the profit in the results, the more likely they are to lend you. So, absolutely, you know, I've come up with a few here. So, there's that point there about, you know, the bank wanting to see good results, you know, to convince them to borrow. That might put a bit of pressure on Kelly to, you know, make the numbers look as good as possible. The profit-related bonus, I think, was a big red flag, to be honest. You've always got to be a bit careful there about what their, you know, incentive is, therefore, to make sure the profit is as high as possible. And even just, I suppose, you know, her own career, you know, she made it very clear that her boss, the owner of the business, was quite high expectations in terms of the sales and the profits and making sure that they constantly beat their targets. You know, that might put a bit of pressure on her that she doesn't want to get sacked, you know, from her job. So yeah, there's definitely a few concerns here why I would definitely go in with my professional skeptical hat on for this one. In terms of specific numbers, and again, I think Kelly talked about a few things that would make me think, right, that's an area I might want to look at in detail. So are there any particular areas, particular numbers in our profit and loss or in our balance sheet that are more likely to be wrong? And in fact, I think we've already had one. I would suggest that the foreign exchange aspect of it, you know, I've dealt with in the past companies that had multiple currencies, and you've got to be very careful making sure that you are translating transactions at the right exchange rate at the right date. Otherwise, it can throw numbers out. So that's actually already one maybe for our list of numbers that could be wrong, is the purchases made in that foreign currency. But are there any other red flags that Kelly gave us?
I'm surprised no one's mentioned the missing purchase records.
What, the fire?
Yeah.
I mean, fire is the classic, and in fact, in accounting exams, you forever see fires either destroying records, like in this situation, or even destroying stock itself, you know, destroying the ingredients potentially and leaving no record. But absolutely, I mean, was it a real fire, or was it just convenient excuse for getting rid of some records they didn't want anyone to see? So yeah, I think that's, I certainly want, you know, could we even go back to the suppliers and see if we can get copies of the documentation? Presumably they've still got copies on their system somewhere. Any other concerns here? I mean, one of the things that struck, she talked about the fact that the stock take at the end of the year wasn't carried out by the normal stock people, was it? It was done by sales staff. And whilst in some respects it's not that difficult to tell people just to count numbers, may they be a bit unfamiliar with the process? So yeah, I mean, in terms of potential areas, I mean, again, we've got this pressure from the owner of the business to make profits look as high as possible. So I would look to be double checking the sales figures just to make sure that there aren't any sort of made up sales. Similar idea with the costs. You just got to make sure that, you know, the profits of the business aren't being inflated either by showing sales that didn't really happen or ignoring costs that did happen. There was mention of a big customer in financial difficulty, and whilst Kelly dismissed the risk of not being paid, I'd be worried about that. You know, if that customer doesn't pay us, that could be a large debt that we're owed, a large asset that we're owed by a customer that's actually valueless and potentially would need to be written off. There's those lost records that Nick pointed out that were burnt apparently in the fire, the issue with the exchange rate translation, and staff maybe doing jobs that they don't really understand. So, I mean, this is one of the reasons why you would spend a lot of time talking to staff, not just the FD. You know, when I used to audit businesses, I would go to all manner of different staff to talk about what's been going on and any things that have occurred, just so you can start identifying where the potential problems are. So I think we've identified a few areas that we'd certainly want to look at in a bit of detail. So about the next step and that third question that our audit partner asked us about testing. Can you suggest testing we could do to check that these numbers are correct? So how can we check that the sales figures are correct and aren't inflated? How can we check that costs are correct? How can we check that the exchange rates were accurate? So again, throw them into the chat box. Let's see what sort of audit tests we can come up with.
Got tallying with receipts.
Yeah, so, you know, if you've got, I mean, physical paperwork. It's one of the things I used to spend a lot of time doing when I was an auditor, is I'd look at the financial records and I would literally say, right, can I see all the backing documentation for this? Can I see the receipts or the invoices? Can I just check that these are the right numbers from the right, whether it's suppliers or customers? I think with things like the foreign exchange transactions, we may literally go back to those relevant months in the year and actually, check, there are records where you can check what exchange rates were at certain points in time. Just make sure that they have been done correctly.
We're short of a few ideas here, Gareth.
Well, I guess we've not got many trained auditors on the call, because this is literally the sort of stuff I used to do for a living for 3 or 4 years. And very much, if any of you do, I mean, auditing is actually a very common entry-level role for new accountants, because it gives you such a good, broad grounding in lots of different areas of finance. And it's the kind of thing you will do at work and potentially learn in your studies. If you look at AAT, there is an external auditing paper in AAT. ICAEW, there is an auditing paper in ICAEW. So you would learn these sorts of things, but the kind of things I would think, so how can we check the sales figure is correct? Well, we might pick some of the sales that they've listed, because what you could ask for is say, literally, give me a list of all the sales for the year. And you could actually pick a few of them and say, right, show me the invoice for that one, just so I can check it did exist and it is the right figure. Same idea.
Susanna's put in a good one, Gareth. Contact debtors to verify the balances owed by them.
I used to do a lot of that, where you would actually write to each debtor who owes the company money and say, right, can you just confirm? Because you imagine the company might be saying, well, they owe us £500,000, and you might write to the customer and they say, well, no, we only owe £50,000. So that's a very common check, actually. Get the debtors to actually confirm what they owe. We could do a similar job with costs as to the sales income, of just looking at the lists of costs and checking back to those. Remember last week we talked a bit about source documents, where all of this starts from. Literally, pull out the files. The other thing you can do with customer balances, as well as write into them to get them to confirm what they owe, is to actually look at them, because hopefully they'll have paid the money within a few weeks of the end of the year. And normally you're not doing the audit for a few months after the year, so you might even be able to look in the bank statement and see that the amount they owed you at the end of December actually got paid in February. So actually that's a pretty good confirmation that they did owe you the money, because they've now paid it to you. And again, the stock, we talked about maybe looking at specific purchases from this overseas supplier, just going back in the records to check that you are actually translating at the most appropriate exchange rates. And that's a short number of the potential audit checks we could do. But as we said, any companies above a certain size, it's not for little ones, but the companies above a certain size, they will have to get the auditors in to verify the accuracy of the numbers in those financial accounts that they're producing. And on the whole, auditors work in practice. So I worked for a big practice firm as an auditor, although some companies have what they call internal auditors who do work within the business, just checking records as they go along. But it's more common that you'd work in practice and then go into clients to do their audit. Well, final thing, just to finish us off, last sort of 5 minutes or so, we've seen costing, financial reporting and auditing, very common entry-level roles for new trainees in accounting. But actually, where do we often end up heading? Well, as we get promoted and build more knowledge and experience, often we might be heading towards the boards, which is that more strategic level and that more strategic role. And, let's say the aims of the company that we're looking at is to grow quickly, and they're going to do that by, say, buying other companies. You might remember Kelly made a mention of acquisition as a way of growing the business. And actually, if you're looking to buy organizations, you might get in professional advisors to actually help with that process. So we've got a final little video just to hear from the managing director.
As you know, one of the company's main strategies is to grow by acquiring other businesses. So I've been on the lookout for any potential targets. My Instagram feed keeps popping up with this new company called Cakes You Want, and they seem to be getting great engagement from the younger market that we are trying to target. I've done some of my own digging and found out a bit about them. I'll send you an email with what I found out. Now, it turns out that they use the same bank as us, and so I've asked our bank manager to see if she can make an introduction for me with their CEO to discuss if they are open to an approach to be bought. In the meantime, can you read over my email and let me know your thoughts on 3 key things? So the 3 things that I want your thoughts on. Firstly, are there any potential risks with acquiring Cakes You Want? Secondly, what further information might we need before deciding to proceed? And then thirdly, other than a simple cash payment to the owner, is there anything else you think we could offer her to persuade her to sell her business? So firstly, I need to know about the risks. Secondly, any other information you think we might need? And thirdly, how could we, persuade the owner to sell her business? I look forward to hearing from you.
Super. So we had a number of different questions again there from our managing director, Amy. So let me go back to our presentation. So just to summarize the questions, what are the potential risks? What's the further information we might like to look at before a decision is made? And what other way can we persuade them to sell other than just giving them straight cash? And to help us with that, I'll give you a couple of minutes to have a read of this one. So we've received a further email from Amy, just giving us a little bit more detail, which hopefully will give us some flesh to answer some of those questions. So if I can give you 30 seconds to have a quick read through that. And a bit like with that conversation with Kelly, this email from Amy just raises a few more points that we would then hone in on to talk about and discuss. So, and again, throw them into the chat box here. So based on this other business's makeup compared to our business, any potential risks that anybody can spot with acquiring them or think we would need to consider? I always think as you move to this more strategic aspect of accounting, I think it's both more interesting, but also more challenging. Requires perhaps a bit more breadth of thought and creativity. So are we seeing anything coming in here? Any potential risks to consider?
Different operational systems.
Absolutely. Always an issue when you're trying to bring together 2 different businesses, particularly if one's very big, particularly if one is quite kind of standardized in what it does and one is very small and more boutique, more quality.
Another nice one I saw go up there, Gareth, is if you are taking on other employees, integrating them may be difficult because of different work cultures.
Absolutely. I mean, culture is it's one of the things that underlies any business, and particularly businesses with different cultures. That can be quite different, and that culture often stems from the top. We've got a view of Gareth, the entrepreneur, as being quite demanding and quite, ambitious. Perhaps this other cake business isn't the same at all. Maybe that could create a real cultural difficulty. So, you've also got potential reputational damage. Jasmine does seem like quite an outspoken individual, which can be good, can be good publicity for an organization, but can sometimes go the wrong way. I'm sure all of us can think of examples in the real world of, business leaders who say the wrong thing at the wrong time. They do seem to be aimed, against the different business model. It's not quite the same as the way we operate. We talked about the clash of working cultures. You've also got the fundamental issue of what if you buy Jasmine's business where Jasmine is probably quite a fundamental part of the success of that business. And what if Jasmine then leaves? You know, what are you actually left with? Are you left with anything that's actually worth anything? You know, a lot of businesses, the value is often around the people who own and who founded it.
Gareth, Toby's asked a really good question. Would a strategic accountant focus on these non-accounting issues, such as corporate culture? I assumed it would be mostly numerical focused.
Well, it's an interesting question, and actually I think the higher you get in your accountancy studies, and indeed the higher you get in your accountancy careers, the more it moves away from just number crunching. You know, you do the number crunching in the early years to get the familiarity with how the accounts work, but I'd argue as you progress in your careers, that becomes much more of a back seat. And accountants, it's one of the things I love about accountancy is you actually get involved in a much broader range of different, you know, strategic areas like this. And in fact, some of the qualifications, when you get to the sort of final level of the exams, there's not much accounting at all. In some of them, it's much more around strategy and around the controls and around the risks within businesses. Because actually that's often a much more important skill for successfully managing the future of the organization. You can imagine, you know, a business doesn't succeed because somebody can do the profit and loss account. It succeeds because it can make the right strategic decisions and take account of risks in the right way. I just think it's exciting that accountants can be part of that decision. And what sort of other information might we need before we were to progress with this potential acquisition? Very near the end now. I'm conscious that it's pretty much 5 o'clock now, so just tailing off for this final few minutes. So what other information might be useful when making this decision?
Got the deal value for acquisition.
Yeah, so how much does she want for the business would be a good one. And how much are we willing to pay for the business? Because you imagine the amount she wants and the amount we're willing to pay could be quite different figures. And will we therefore meet somewhere in the middle? What would that be based on? Well, I'd probably want to see financial results from her business. You know, what's her P&L like? What's her balance sheet like? It's the first thing I ask for if ever I'm looking at a potential acquisition target.
A few people mentioned about outstanding liabilities of the acquisition target.
Absolutely, yeah. And, you know, not just current liabilities they already owe people. I mean, obviously, if they owe their landlord money or their suppliers money, that's something we'd need to consider if we buy them. But what about potential liabilities? Let's say there was a lawsuit outstanding. Let's say that, I don't know, somebody had become very ill after eating some of her cakes and was trying to sue her company. Is that something we'd need to consider? Because obviously, if we bought her company, we may become liable for that sometime down the line. So yeah, you know, a few ideas here. You know, as I said, the sort of latest results for their business, the P&L, the balance sheet, even forecast sales for the future. I'm a big believer that you don't buy businesses for their historic results. You buy businesses for their future results. Contracts. If any of you ever watched Dragon's Den, you know, when the entrepreneurs are on Dragon's Den trying to raise funding, one of the first things the dragons tend to ask about is, do you have any existing contracts? You can imagine if you've got a contract to sell 5 million units a year to, you know, a major supermarket, that in itself is worth a lot of money. That will give value to the business. We talked about some ongoing legal cases as potential liabilities. And actually, if Jasmine was to leave, you've got to think about how reliant is the business just on Jasmine. So what's her management team like? You know, what's the caliber of the individuals working elsewhere in the business, just in case she was to leave? And then final little question, just a couple of seconds on this. So, you know, other than simply giving Jasmine a chunk of cash for her business, what other approaches could we use to buying a company? How else can we convince somebody to sell us their company rather than by just giving them cash?
We've got dividends from future profits.
Yeah, so actually what we could do, because that would assume that Jasmine is going to still have shares. Actually, what we could do is offer her shares in our company in exchange for buying her company. So she would end up with dividends from actually the wider entity, but that's a very common way of buying businesses, is to give them shares in your company for the shares you want to acquire in their company.
We've got decision-making powers.
Which, yeah, again, you know, particularly if Jasmine was going to stay as part of maybe the board for the future, you know, that's very common. You imagine we may actually give her a position on the board. So as well as giving us some, what we may do is say, well, we'll give you some cash. We'll also give you some shares in our company, and we'll let you be a director on the board. And that actually might be quite an attractive package for her, to get some cash, but also to retain, as you said, Amy, that sort of decision-making power. So that's about strategy, and as we said, that's a role that often accountants grow into as their careers develop and their experience expands. But I personally think it's the more interesting, exciting elements of accountancy, actually helping to run or advise businesses on their future. So we've had a bit of a look through costing, financial reporting, auditing, and strategy. Now, bear in mind, they're not the only roles that exist. There, there's insolvency we mentioned, there's tax advice that we mentioned, but hopefully that's given you a little bit more of a flavour for the sorts of activities that accountants get involved in. I hope that that has been of interest to you. So that's our first objective. Second, well, you have actually helped me with some of the decisions around setting prices and audit tests. So you've actually helped me with some of those decisions. And again, I'm hoping that this session and our other sessions are inspiring you to find out more about accountancy, and maybe to consider whether one of these career paths would be useful for you. And so just to finish off, just remind you, we are back next week, same time, 3:30. And the next session is going to be looking at these transferable skills, the kind of skills that accountants require. And it's not the ones you'd imagine. Everyone always thinks that accountants need to be really, really good at maths. And that's really not the case at all. So thank you very much for your attendance. Sorry that we've drifted on a few minutes after 5 o'clock there, but we had so much different things to cover today. That's been great. Thanks for your input. Thanks to my colleagues for helping out. And yeah, we have been recording the sessions. We will be getting the recording available. So thank you very much, and hopefully see some of you next week.